Hey folks, hope you all are doing well. I'm Karan Bandal from Econosite, and in this video let's compare the two major EV makers, that is Tesla and BYD. Also, let's take a look at what might lie behind Tesla's potential move into India. We'll look at these two firms across four factors, starting with valuation. Tesla is probably the most famous EV maker globally. The company listed its stock in June 2010 priced at around $17 a share. About 14 years later, Tesla stock has grown over 9 times as I speak, giving it a market capitalization of over $550 billion. It is the most valuable car company in the world. BYD was founded in 1995 and was focused on producing nickel-cadmium batteries. Nearly 30 years later, the Shenzhen-based firm has become one of the world's leading manufacturer of EVs. BYD has grown rapidly and is now valued at around $81 billion in market capitalization. The company appears to be catching up fast with giants like Ferrari and Mercedes-Benz, but in terms of valuation, Tesla is still over 6 times larger than the Chinese firm. Next one is sales. Tesla has been dominating global EV sales, but BYD is gaining on Tesla. In 2023, globally, Tesla sold about 1.8 million plus EVs. BYD sold 1.6 million. That is, Tesla sold over 200,000 more cars than BYD. This gap, though, has been narrowing, as you can see. BYD has seen an exponential growth in EV sales, and look at this. In Q4 of calendar year 2023, BYD hit a major milestone. BYD sold more EVs than Tesla due to A. Demand slowdown for Tesla cars in China, and B. A general deceleration in EV demand in the world. But the Chinese company stumbled in Q1 of calendar year 2024. It sold only about 300,000 EVs against Tesla's 386,000 plus. The third factor is pricing. This in fact has been the key. That is, BYD's competitive pricing has been the key for its rapid rise. Tesla cars are of course pricier, and the competition in the Chinese car market is heating up. In March 2024, BYD slashed prices of some of its best-selling models. Yuan Plus crossover discounted 11% that now costs around $17,000, and BYD's cheapest car, the Seagull, discounted 5%. The cheapest car now starts at under $10,000. Tesla has followed suit. Its best-selling models are Model 3 and Model Y, and despite the price cuts, Tesla cars still cost at least 2 to 3 times more than BYD's. The two firms are fighting hard to capture markets outside of China as well. That brings us to the final factor, global presence. Of the 1.8 million EVs that Tesla sold in 2023, about 61% were sold in the United States, EU and Canada. 33% were sold in China alone. So China is a very important country for Tesla, both from domestic sales standpoint and exports. Tesla started production at its Shanghai Gigafactory in 2019. This is also Tesla's main export hub. It has delivered almost 1 million cars in 2023. BYD, however, doesn't sell cars in the United States, but it has a bus manufacturing plant in California. China market is crucial for both BYD and Tesla. See, in 2023, global EV sales were 13.6 million. Of that, almost 8 million EVs were sold in just one market, China. That's almost a 60% contribution. And this year, EV sales in China are expected to hit 10 million. But cracks have started to show up in the China story. We see a sharp drop in BYD's sales in Q1. Tesla has suffered as well. China's real estate sector crisis and consumption slowdown is likely to spill over in the EV space as well. So now both the companies are looking to expand beyond the United States and China. They both have announced plans to invest in and develop manufacturing plants abroad to reduce costs and increase sales in regional markets. BYD is aggressively expanding in Southeast Asia, South America and Europe. Tesla has just announced its plans to expand in India. Now, I think there are two drivers behind Tesla's potential move into India. First, in March 2024, India lowered its import taxes on certain EVs produced by the automakers that commit to invest at least $500 million and start domestic manufacturing within 3 years. And second, a slowdown in Tesla's EV sales in the markets it is already operating. India's EV market is small but growing. It is dominated by India's Tata Group at present. In 2023, EVs made up a little over 2% of the total car sales in India, but the government wants a 30% EV share by 2030. So there might be generous subsidies coming for the EVs in the years ahead. The two-wheeler, three-wheeler and bus markets have in fact a much better EV penetration compared to the passenger car market. But Tesla only makes passenger cars for now. So Tesla is scouting sites in India for a $2 to $3 billion EV factory. Tesla's team will visit India late April this year, and they are going to focus on the states that already have well-established auto hubs such as Maharashtra, Gujarat and Tamil Nadu. Another crucial development that goes hand in hand with this one is in the chip space. Tesla reportedly has inked a strategic deal with Tata Electronics to acquire semiconductor chips for its global operations, potentially setting a stage for a much deeper relationship between the two private firms. If indeed these investments pan out, Tata will have to up its EV game. Right now, Tata's EVs range from around $10,000 to $24,000. Once Tesla models enter the competition, Tata will either have to offer the same vehicles at even lower prices or raise the value proposition of their models to compete with Tesla's unique features such as autopilot, full self-driving, superior acceleration, range, charging speeds, etc. In summary, Tesla and BYD are the two key EV companies in 2024. While Tesla leads the pack, BYD is fast catching up. Tesla appears to be taking a bet on the India growth story. So as Tesla and Indian domestic car makers compete in the Indian market, Indian consumer is likely to reap the benefits. I hope you found this analysis interesting. I'll speak with you again next week. Until then, take care.